Back in May, Jay Morrison projected that the Tulsa Real Estate Fund would be in position to pay out a dividend to its investors on October 1st or earlier. Well, today is October 26th, and last week he had an investors call where he announced that there would be no dividend for this quarter, as I accurately predicted. Once you strip away the emotional component and you simply look at this fund for what it is, and you look at the numbers and you look at the lack of experience of the fund manager, it's very simple to arrive at the conclusion that they would not be able to pay out a dividend this quarter, nor will the fund be in position to pay out a dividend in the coming quarters. Now, before I get to why I feel that way, I want to play a quick clip for you so that we can put this in its proper context.
And the naysayer and the hate is not going to stop us getting to our dividend day, God willing, and getting us to. But then when it's dividend day, they're going to say it wasn't fast enough or wasn't large enough, because there's people that are committed to discrediting our organization. These are the facts. It's very easy to blog and disparage on Instagram, make YouTube videos. But to do this in real life, to perform in real life, and we're going to make our way to dividend day. I look forward. I want to see the creative marketing that our haters, Black COINTEL Pro, I want to see the creative marketing that they spin on how when dividends are paid out, how that's a wrong thing. Because we're going to work. We are blessed. We prayed over these grounds. These grounds are anointed. When we broke bread and we put shovels in the dirt, we prayed over these grounds. The spirit of our ancestors are here. There's folks that are talking about doing a protest. Folks that never led a political protest in their life are talking about doing a protest at the Black House. The day after Marcus Garvey's birthday. How despicable. The day after the Honorable Marcus Garvey's birthday. The first man to raise capital on American soil at this level. They want to do their first act of protest ever in their life at the Black House. Shame on you, devil. That's the devil doing that. That's the evil black man doing that. Your spirit.
What I find funny about that clip is he said to perform in real life. Yet he has lost money in 2018 and 2019, yet he still paid himself a 5.5% management fee. Oh, no, wait. He didn't pay himself the 5.5% management fee. The four partners received the management fee, and then they could decide if he gets a portion of the management fee. What a joke, right? But anyway, the reason why I was able to arrive at the conclusion that the fund wouldn't be in position to pay a dividend is it's just simple math. Right now, the fund is in a hole, meaning it's operating at a net loss to the tune of $1.2 million. Now, if you look at the SEC report and you see their operating expenses, it's safe to say that it costs about $200,000 to $300,000 on an annual basis to run the fund. So we're going to deal with whole round numbers. If you're in the hole $1.2 million and you need $200,000 to run the fund, that means before the fund could even get to break even, he needs to clear $1.4 million. Now, you can't just stop there because obviously you need to be able to grow the assets under management. Now, he currently has $13.7 million under management, but we're just going to round it down and say $13 million. Because again, you can't just start paying dividends every dollar after 13.7. So let's say a safe capital cushion to grow the fund and be able to pay himself a 5.5% management fee and give you an 8% preferred return, he would need to return about 8% on the assets under management. Well, 8% of $13 million is $1,040,000. So if we combine the $1,040,000 with the 1.4 million that he's in the hole, that will basically get you to somewhere in the ballpark of $2,440,000 of total profit, net profit after taxes he would have to generate to be an astute fund manager and position his fund to really be able to pay out dividends and not end up back in the red after paying out the dividends. Now, let's think about this for a second. If he lost money in 2018 and 2019, where every financial asset was performing well back in 2018, 2019, literally the Fed threw everything plus the kitchen sink at the entire economy, and this man still lost money. The S&P returned well over 20%, yet he still lost money. If he lost money in 2019 and 2018, it's very safe to say that in the middle of a pandemic, he's going to lose money as well. Prime example, let's just look at the Legacy Center. Right now, with social distancing, it's safe to say that they are not bringing in the revenue that they were projected to bring in. Also, the fact that it's located in a pretty bad area for a co-working space, but that's beyond the scope of this video. The Legacy Center is probably operating at about 50% capacity. So meaning revenue is going to be slashed in half, which then leads us to what? The asset's not going to perform well enough to be able to generate enough revenue to be able to make that $2.4 million to get the fund to a healthy position to be able to pay out dividends. Another thing that I noticed when I was listening to the investor call is he said that they raised $13.7 million, but they have 15,000 investors. That is extremely poor to be able to only generate $13 million, but yet have so many investors. And what he said is that they, which is true, they have the compliance and the overhead of a $50 million fund, yet they don't have enough capital to be able to really exercise a lot of the strategies that he wanted to execute on. Now, follow me here, because this ties back into the entire ADOS conversation and the fact that the racial wealth gap, that Black people are a wealthless group of people. Yet these HOTEPs, these Back to Africa, Red, Black, and Green B1s, they constantly want to make it appear as if it's our fault that we are poor and that we're not giving them enough money for them to execute their vision. Maybe you should stop trying to squeeze a rock and expecting to get juice or water from the rock. Black people barely gave you what they had. It's very simple. If you look at the racial wealth gap in terms of household wealth, Black people, they have less than $5 trillion in this country. White people, they have over $100 trillion worth of wealth. Why do we constantly keep going after a wealthless group of people and then trying to shame them because they cannot give us enough money? When what you should be doing, Mr. Swaggy, Rich, is going over here where the 100 trillion is at and either competing with the dominant society or creating investment vehicles for them and then taking that money and bringing it back to your community if that's what you truly wanted to do. And what I find so odd and strikingly and just weird is that you have a finance PhD in Mr. Watkins, who clearly invested in the Tulsa Real Estate Fund. His entire platform is based upon financial literacy, yet he's not applying financial literacy to the fund and actually looking at the information and saying to himself, okay, there's a problem here and I can use this as a moment to teach people. Because see, what good is it to, invest in a Black fund and support a Black business if the Black fund is going to treat you exactly like the white fund, if not worse? Because in this case, you're not even getting your dividends. At least if you invested in a white fund, you would get your dividends. So wouldn't it make sense to apply financial literacy to this and use this as a moment to teach the community? But no, our finance PhD is busy talking about WAP and busy talking about Lizzo twerking. And at a certain point, we have to start looking at these things and just simply saying to ourselves that this doesn't make any sense. And this idea of Garveyism, that you're not going to take on any debt and any leverage. Understand that once he realized that he had 15,000 investors and he couldn't crack $20 million, the very next thing that he should have did was he should have went and start figuring, okay, now I need to start using some leverage in debt because interest rates are extremely low to execute the vision, because clearly you don't have enough capital to just simply go into these deals and buy everything with cash. We live in a fractional reserve banking and lending economy where literally debt is money, but yet they don't want to take on any debt. But then they're getting mad that we don't have enough cash to give them to execute their idea. Garveyism is dead. It doesn't work. It is a failed concept. It is a failed ideology. But yet, you keep hearing and seeing these people keep talking about Garveyism. You have to move and evolve and grow. And there's also something known as the opportunity cost on money. Because I know what a lot of you are going to say. I know you hoteps. It took Amazon years before they returned a profit. So you got to give the brother a chance. I understand investments carry risk. And I also understand that it takes time to develop an asset. But what many of you don't understand is there is something known as the opportunity cost on money. And if you go back to June of 2018 and you look at the FANG stocks, for example, Facebook, Apple, Amazon, Netflix, and Google, Apple was trading at around $49, $50 per share. Now it's at well over 100. Could have doubled your money. Look at gold. Gold was trading at what, $1,100, $1,200 an ounce? Now it's trading at $1,900, right? Could have made 30, 40% of your money. Go back and look at crypto. Look at Bitcoin, Ethereum, Chainlink. Chainlink probably was trading at somewhere like 50 cents back then. It's now trading at almost $12. Bitcoin was trading at $6,000 per coin. Now it's trading at almost 13, right? So you could have doubled your money in so many better investment vehicles, and you would have been liquid rather than having your money tied up in an illiquid asset. So again, I'm not trying to cherry pick. I'm just trying to get you to understand that you don't know when this fund may become profitable. And a lot of the times, when you're dealing with these hotep brothers and sisters, they always want to deflect and try to make it seem like, because you're buying an iPhone or because you have Nikes, that somehow if we just didn't buy those products, we'll be able to, build wealth. And they gaslight you with that type of stuff and say, well, we're going to buy back the block or we're going to combat, gentrification. Understand that you are competing with private equity firms that literally they have billions of dollars under management and they're leveraging debt on top of that. And they have all of the proper lending facilities in place to be able to leverage that debt up. Oh, and they can get bailed out by the federal government, right? Conspicuous consumption is not wealth. Just because you can consume Jordans and you can consume iPhones doesn't mean that you have wealth. Why do I say that? Because when you look at your counterpart, understand that they're consuming the same products and services that you're consuming, but they have adequate health care. They have adequate health insurance. They have equity. They own their homes. They have 401ks. They have pensions, right? Many of you are consuming these goods and services, these luxury items, at the expense of not saving any money, at the expense of your student loans being in default, at the expense of your credit being shot, right? If you actually took that money and applied it to fixing your life, you wouldn't have any disposable income. Investing is for people that actually have disposable income, which then leads me to my next point. One thing that you have to give Yvette and Tone credit for is that they've elevated the level of conversation. Because one thing about brothers like Jay Morrison is they do a lot of talking really, really fast. But as Tone constantly says, they're not saying anything. And it's very, very true, because when you just analyze this, you can see this was flawed from the very beginning. You have to be rooted in objectivity and just being able to look at the information for what it is and looking at the data. And if you look at the numbers, you can clearly see that this isn't structured properly. It is structured for him at the end of the day, whether the fund makes money or not, to receive a management fee, which doesn't make any sense, right? And then the split as far as the profits are concerned, 50-50, doesn't make any sense because you're taking more of the risk than he is. And all of this talk about what we should be doing as a community and constantly berating us and constantly trying to belittle us and making us feel, less than because we don't have enough money for them to live out their dreams. When all of that stimulus money was getting passed around, no one from the pro-black community, where were the hoteps that back to Africa's lobbying the federal government to get some of this stimulus money that was being doled out left and right? The Federal Reserve put together, a $7-8 trillion lending facility altogether. And the federal government, then they put together what, $3 or $4 trillion for small businesses. Where was these, business minds and business leaders in our community focusing on trying to go and get some of those resources and bring them back into our community? You hear these people talk about group economics, and I believe in doing for self. I'm a bootstrapper, I'm a striver, but I also understand there's limitations to doing for self. Where are these business minds and people at when it counts to actually go and get some of these resources? Again, I believe in doing for self for those of us that can. If you have the intellectual capital and you have the financial capital, you can do for self. I believe in doing group economics if it's going to benefit the group. But see, when you're dealing with these hoteps back to Africa, red, black, and green B1s, they have all of these grandiose ideas or what they're going to do with the money and how they're going to build this and build that. And it's all about the group and it's king and it's king this and queen that. And then they get your money. And then it turns to, why you watching my pockets? Now it turns into individualism and capitalism, where it only really benefits them. And you may get a little trickle down benefit, but the group doesn't benefit because they're not really trying to practice group economics. This is a hustle for many of them. And you have to get beyond this point of constantly following these people. Those of you that can do for self, do for self. But understand there are limitations to that. If you believe with $13 million that somehow you are going to go out here and you are going to compete with these private equity firms that have billions of dollars, you are delusional at best. In my previous video, I spoke on how a hedge fund literally was able to buy up an entire Atlanta zip code. An entire Atlanta zip code. They were able to buy it up. We have to elevate the conversation. And what I find troubling and ironic is that I have brothers coming onto my videos in my comment section and coming onto my Instagram page and leaving me DMs where they're calling me an agent, they're calling me a coon, they're calling me a Sambo, saying I'm a sellout for the white man. Do I get on my knees and spit or swallow? Calling me a bussy warrior and saying I'm a part of the, alphabet community, the LGBTQ community. I want you to think about this for a second. These are 30-plus-year-old men, 40-plus-year-old men who are talking about bussy. Not talking about the fact that the racial wealth gap is real, that we don't have any wealth, that we are a wealthless group of people, that we should be focused on politics, that those of us that can do should do. Not the fact that this man is an amateur when it comes to actually managing money. Not the fact that he has a conglomerate of sister companies, right, and vendors who may be receiving this money from Treff. No, we're not talking about that. Not talking about who are the four partners. Not talking about the fact that his wife is a part of a real estate investing company, yet she's a spoken word artist, right? Like, not talking about the leasing agreements that he has inside of the Legacy Center. Not talking about her business allegedly being a part of the Legacy Center. No, we're not talking about that. We're talking about bussy. Your finance PhD, do you think that he's talking about these conflicts of interest and how this doesn't look right? No. Let's talk about WAP, let's talk about Lizzo, and let's talk about Sukiyama. This is where we at. So going forward, I'm not going to be covering this Jay Morrison stuff anymore because I just feel like, I don't want to be looked at as the scapegoat as to why the fund isn't performing. Because prior to me making videos, the fund was already losing money back in 2018 and 19. So you can't use me as an excuse as to why the fund is underperforming. You also can't use the pandemic for why the fund is underperforming. The fund is underperforming because your fund manager lacks the experience. That's why the fund is underperforming. So going forward, can Jay Morrison fix this? Absolutely, he can fix this. You know what he needs to do? The first thing he needs to do is he needs to stop paying himself or the partners the 5.5% management fee. Instead, use that money to acquire talent so that you can properly run the fund the way the fund needs to be managed. The next step is stop being in front of the camera. Stop trying to be Mr. Pro Blackity Black, wokety woke. Focus on being the fund manager for what you're getting paid to do. Focus on that. And that will definitely help the fund going forward. And I'm going to close the video like this. I understand many of you just want to see a black man win. You don't care how he wins by any means necessary. You just want to see him win, and you don't mind supporting him, and you'll support him to the very end. That's not investing. That's called charity. So understand that what you're doing is an investment. What you are doing and what you are giving away is a donation.